All right, all right, all right. Good morning, good morning, good morning. How are you guys today? It's another day, another dollar. Today, we're going to try the same strategy that we did yesterday in Power Hour. So, for those of you who didn't learn the Minesweeper strategy that we did in Power Hour yesterday, you're going to learn that today. We're going to change it up a little bit, and we're going to go beyond the Minesweeper strategy that we did yesterday, and we're going to change a few things. All right, so we're going to play around a little bit, change some settings, and try some different strategies. But before we get started, we need to do the due diligence. All right, don't want to always forget our due diligence. Let's come in. And the first thing we need to do is figure out how to get me out of the way. There we go. And this is the Dow. And let's come in, and I want to go and look at some of these other markets. So let's come on. Delete this one. Let's delete this one. Let's delete this one. Let's delete this one. There we go. All right. So the NASDAQ is the one, I think that's the one we were trading yesterday. Yeah, in range 50. All right. And then we've got the Russell down here in the bottom left-hand corner. We've got the mini Dow up here in the top. And as those of you know, mini Dow is kind of my favorite. That's kind of the one I like the best. Although yesterday we were trading the NASDAQ, and we traded the NASDAQ on range bar 50. And then, of course, this is the S&P 500 up here in the top. Now, what I like to do with the S&P 500 is I like to trade options on it, and it's sitting right at the VWAP right now. And the market just opened. So there's the opening bell. So let's see, why did it take off before the opening bell? And when the opening bell rang, it didn't do anything. That's weird. All right. So what do we got going today for news? So let's pull up our news calendar. And let's refresh that from yesterday. Today is Thursday. My gosh, I thought it was Monday. I thought it was Tuesday. I thought we just had Monday yesterday. It's already Thursday. Tomorrow's going to be Friday. The weekend's coming. Holy cow. All right. So at 8 o'clock, we have the ISM Manufacturing PMI. Purchasing Managers Index. Forecast is 48.2. The previous was 48.5. The consensus 48.8. So we're going to have to wait and see what that does to the market. It's not for us to decide whether the news is important enough to move the market up or down. All we know is it's going to move the market. And then we need to be there to read the chart to find out which direction the market's going to go. All right. So with that, let's come in and see if we can't set up our Minesweeper. Now, for those of you who are going, Minesweeper, I never heard of Minesweeper, Lan. What's Minesweeper? Let me show you a little slide here. And bring this back up on the screen. All right, so this is our slide deck that we use here in class. And we got a strategy down here. There's the cat's meow. We talk about that one. We talk about the intercept. There's the flea flicker. There's the king tut. There's the Balaam's ladder. There's the yippee-ki-yay. There's the profit box. Hey, wait a second. Where did my Minesweeper go? Oh, there's Minesweeper. All right, Lan's Minesweeper scalping strategy. All right, so here's Minesweeper. So if you guys have a little iPhone camera type thing, Google camera thing, whichever one you prefer, go ahead and take a snapshot picture of that. So you have it. And we will go in and look at this. So Minesweeper trading strategy. What we're going to do is we're going to set up the order OCO order tools with a static trigger stop entry order, position entry just above a previous high or below a previous low for a short. We're going to attach an OCO stop and limit orders contingent on the static stop being triggered, pre-programmed with the TNTQ OCO tools. All right, so our profit target. Set a profit target limit of, and I got in here 5 ticks. Today we're going to change that up a little bit because we had really good success last night or yesterday in the Power Hour. But what we didn't do is we didn't make a whole lot of money because we only did 5 ticks. Now, of course, we were trading quantity 1 most of the time. And this is a strategy where you have really high percentage of wins, so you can increase the quantity. All right. But it's all relative because you have to pay commissions and fees against that 5 tick profit. And that's all you're taking is 5 ticks. Your commissions and fees are going to eat up a lot of that. All right. So we're going to raise that up. We're going to go to 6, then we're going to go to 7, then we're going to go to 8, we're going to go to 9, we're going to go to 10. And we're going to practice this today and find out where that sweet spot is, where we can try and maximize, get the most profit potential, and still have a high percentage of winning ratios. So, and then we're going to also start jumping or moving the stop order a little bit. As our limit order gets a little bit further out, we take bigger risks, so we want to move that stop up a little bit so we don't get whacked so hard. You can see in here that we've got this set in here. On these settings, our stop is set at 40 and at 5 for the limit. All right, so we're going to try that. I also have price bars back so it jumps a little bit in here on the trail. We didn't do that yesterday. We just had it sitting static because we didn't have it move. All right, so we'll see how that works. We're going to come in here. This is a stop loss. Place a stop order 40 ticks behind the rising market. Execution, place your multiple bombs, as I like to call them, bombs, to capture quick scalps as the market moves through previous highs and lows. The OCO trailing stop is meant as a last resort parachute stop measurement, only executing if the trade goes awry. All right. Awry. That's a word we don't use very often, is it? Oh, the trade went awry. All right. Also today, oh my goodness sakes, today is a wonderful day. Why? Because it's the 1st of August. And so we get Pit News Magazine. Today you get the August issue of Pit News Magazine for all of those of you who are subscribers, which is everybody here. I am certain that if you come to this class, you are a subscriber to Pit News Magazine. And Pit News Magazine is going to be released today. So that's going to be a great fun thing. It's a good issue. I'm really happy with it. It's got a great article in there on options trading, an option strategy that I like, one of my favorite option strategies. So that's in there to look forward to. Of course, we got a couple of things in there on the Wild Eye, Crazy Eye, Iron Butterfly. I think there's a strategy in there on that one of those. And then there's a couple more. There's one from Aiden Gray. And of course, Claire Christensen puts in her 2 cents worth as well. So we got a couple of our favorite authors writing articles for us in Pit News Magazine, and watch for that. We'll get that out this afternoon, and that'll be released. And of course, you can listen to all those as well. So if you haven't got Pit News Magazine, go over to pitnews.com, sign up. You can scan that little blue code right there on your screen, and it will get you signed up into Pit News Magazine. All right. So that is what we are doing today, August 1st, first day of a new month. So we also need to pull up our spreadsheet. Where is our spreadsheet? Can anybody remind me how much money we made yesterday? I can't remember. Well, I think when we left, it was a little over $1,000, $1,100, something. I can't remember. So we were trading with Bruce yesterday too. Bruce was in the class. Bruce, can you remember how much we closed out at the end of the day? I put in there $1,000, but I can't remember what it was. But this is our month of August. Had a lot of days off. This was kind of a lazy month, and this is generally pretty typical for traders across the board. July is a pretty lazy month. August starts to pick back up, and so traders will start trading a little bit more in August. But September, October, November, those are 3 of the best months of the year. And then, of course, January, February, March, April, May, June, going back into summer again. Those are also great months. So those 6 months during the colder time of the years, when we're stuck in the house, a lot more traders trading. So when it's nice and warm, everybody wants to go out and barbecue for some reason. I don't know what that's all about, but they don't do as much trading. I don't know. The sun comes up. So we got early risers. The sun comes up early, and the sun's shining in through the window during the opening bell. So I don't know why we don't get as many people trading in the summertime in the mornings. Maybe they're up riding their bicycle and exercising, right? That's what you guys are all doing. You're not trading because you're exercising. That's what's going on. Can't remember how much we made yesterday. So I put $1,000 in there. I run that across, did my final total. We met our goal for the day. I can't remember what we did the day before either. We had a trading day then, and I can't remember what we did. It was somewhere around 1,200. Kirk's saying, I think so too. I think it was over 1,000. I'll take Kirk's number, 1,200. There we go. So we averaged this month, even with that really lousy month, a couple of days where I went hog wild crazy and tried a whole bunch of really weird, crazy stuff. And this is, I think, where we did the dollar cost averaging and blew up our account. So we did that a couple of times this month to practice that strategy, just to show you that it's a dangerous one. I guess, that's do as I say, not as I do. And gave us some really bad trades in there. So we ended up hurting ourselves pretty bad here. We had a good day here. What was this $6,000? Got paid for doing the wrong thing. I tried to dollar cost average into the extra. Oh, that's where I dollar cost averaged in the morning, and then in the afternoon, I made it back. So anyway, that was a real struggle. And I can't remember. I'm going to have to figure out. I can't remember what we did on Tuesday. But it looks like Monday was a green day, so we get to fill in that green. Oh, wrong one. Fill in this green. And then 31 was a green day, so we'll fill in that green. I hit the wrong button again. That one. And I can't remember what this one was. All right. So anyway, that's how our spreadsheet turned out for July. Running average is about $962 with these couple of nice days. We had a couple of bad days in there. We still even recovered from those and still made a little bit of money. So this is actually a green number over here, so we can make that green. So we actually made $900 this month. So in January we made 13, February we made 2,000, March we made 12,000, April we made 10,000, May we made 32,000. That was a really good day, really good month because of all of the wild eye, crazy eye, and butterflies we put on. And then we made June we made 6,000, July $900. So that was a little bit of a sad. Lots of vacationing on that day. And then so for total this year so far, we're up 64,000. And I didn't make my August spreadsheet yet. So I will make that August spreadsheet and I will get that out. I'll try and get that done for because this goes out with the Pit News Magazine. So if you are a subscriber to Pit News Magazine, I need to have this August issue done. For you to go out with the Pit News Magazine. I'll try and get that done before they send out the magazine this afternoon, so that's updated. All right, you get the August sheet ready to go. All right, so let's get back over here to the charts. Let's bring this back down and see if we can't set up our Minesweeper. Which one should we do Minesweeper on? Should we do Minesweeper on? In the morning we probably shouldn't do Minesweeper, because we could do scalp and trail, because the market generally runs a little bit better in the mornings, and we can get some of these big long moves. Like we could catch that move right there. That was $255 per contract. What? $255 a contract? Lan, you're kidding me. That run right there from the bottom of that one to the top of that one in the mini NASDAQ, that was $1,715 if you had to put your order in there on that break of that yellow dot. Now let's just go to the break of the yellow dot. Break of the yellow dot. And then up to where it's currently trading, that was $985. So see, if you would want to try and scalp and trail, do the trail, try to get the longer trends in the morning. That's a better strategy than the Minesweeper. Minesweeper is usually a little bit better when the markets are a little bit quieter and not trending as well. But you haven't learned Minesweeper, so you got to learn Minesweeper. For those of you who are, again, not here yesterday, we got to do Minesweeper. All right, so let's come in, and I'm going to show you the settings for Minesweeper. Which one should we do that on? Yesterday we were doing the NASDAQ. Let's do the NASDAQ again. We're going to pull up NASDAQ full screen, and we're going to come in, and we're going to practice Minesweeper again. So let's come into the trading tab, and I'm going to show you the settings for Minesweeper. I've got them set in here as strategy number 20. So I'm going to right-click on that QOCO button. I right-click on it, bring up strategy 20, which we entered in yesterday during our power hour trading day. And that is the setting. So grab your phone and take a picture of that screen. Bruce says it was $1,170 that we made yesterday. So I need to adjust my spreadsheet. I like Kirk's number 1,200 a little bit better, Bruce. Hey, I had 1,000 in there, so I like both of your numbers better than the number I had. So look at this market go. Man alive, that NASDAQ is on fire. So there we go. That's the settings that we're going to be using on QOCO3. And let's go to QOCO4 and do the same thing. So there's number 20. So if we pull up 20, there's Minesweeper. So there's strategy number 20, Minesweeper, or we're going to 5 limit stop 25. And then in the document, I have it set to trail price bars back 1.1 so that parachute stop jumps up for us if it's shorter than 25 ticks back. We can do that. We can come in here and we can say, okay, trail price bars back, and we'll just put in here 1.1. All right. Now we're going to be doing a range bar 50 on the NASDAQ. So that price bars back 1.1 is probably not even going to get a breath of a chance to be used. It'll just sit at the 25 back because 1.1 on this is probably going to be more than likely way further back than anything else, anything we're going to be running. But we'll see. We're going to put it on. All right. So that's QOCO4. Let's go back to QOCO3, go to 20, and we'll turn that same as I just want to have it the same as we had in the document. All right. Price bars back 1.1. Okay. There you go. All right, now the way this game works, the way this Minesweeper game works is that we come in and we start putting these orders in. One's a stop and one's a limit. That's the difference between the two. We're going to put this in as a stop right above that high right there. So it breaks that high. We jump in, take a little bit of profit real quick, scalp out 5 ticks, and that's all it does. But it's got to break above that previous high and pop higher. That's coming up at a kind of a little stop sign right there. I'd more likely call that a stop sign than a continuation. I don't know if I really think that's a good strategy on that one. I like internals, higher highs, like an internal is this one here. A little higher high inside the trends rather than the major ones. I don't know. We'll see. It went right up and stopped and rebound off of it. Oftentimes the second one is the one that goes. Okay, let's see what it does. We're only doing one. This is a quantity 1. You can see we got it set. We got all the little lines turned off. Track and trade, usually when we come in here and we do the preferences, you have all these lines turned on, right? So show text when I've got it set to, you can have show text all the time, right? But then that gets a little bit too much when you got all these little bombs on the screen. So we take that one off. It's just when it's hovered or highlighted. And then what else did we turn off? We turned off the lines. So the horizontal lines that generally go clear across the screen. That line is one I drew. That's not a line that goes with the orders. So we can, for some reason, here, kill it this way. Delete all drawing tools. Oh, wait a second. Did that order just fill or did I just kill it? What happened? Closed. It filled. Okay, we made our 25 bucks. You got to take out commissions and fees. I don't know what your commissions and fees are for a contract. That's in and out. $25. We went in and out. So quantity 1. I don't know what your commissions and fees are on that. But we made $25 against your commissions and fees. So we could do it again. Set another little bomb in here. And this is, we're going to use the stop. We could use the limit, but the limit is one that we usually drop in below like this. So we can use a little trailing stop like that. Okay. We only made $5 on that one, but it popped down and popped back up. And that was the point of that one. It's not been quite as sporadic. Well, we do have it on a range bar 50. It's not, oh, you guys can't see that. Oh, you can see it. It's right there. Here, get me out of the way. Where should I put me? Up here. That's good. All right. So now we can put another little bomb right up here, a little stop bomb. I like the stop bombs a little better than the limit bombs. So market just has to break through by 5 points. Now, we did this yesterday, got high probability of returns with a 5. What I want to do is I want to go and change it. So we're going to come in and we're going to go to 20. Minesweeper stop 20. And instead of having 5, we're going to change it to 6. All right. That's all. One tick. Instead of 5, we're going to go to 6. And we're going to see if that makes much of a difference. Okay. We just won another 30 bucks. I will do the same thing here on 20. So we'll go and we'll change that to 6. Oh, look, I got stop says 25 on here. That's not right. Oh, it is too. 25 is for the stop because we're doing limit. So this is 6. All right. So that's 6 on the limit. All right. Let's try this again. So now the market has to move 6 ticks instead of 5. And we're going to put that up there. I'm just going to use my cursor to line it up. Has to break above that previous high. Or we got another one right here. We got a low, don't we? So we're going to use the stop on that one. And we're going to put it right on that. Just got to break that new low, and it'll break below that low. So we got highs and lows. Again, remember, the rules are place OCOs with static trigger stop at entry, position entry above a previous high or below a previous low for a short. So that's just all we're doing. We're just going to set these little bombs so that, and I call them bombs because I take that one's filled. Let's see. That one backed off. That would have been better. Oh, and see, we got stopped out. $130 loss. That would have been better with a limit, huh? Because it's an internal. It's an internal low. Internal low means that it's not a new high. It's not a new low. It was just an internal low. So internal lows like that, I generally use the limit order. External highs like this or lows like this, those I use the stop order. Stop, stop, stop. This one here would be a limit order, and I used a stop order on it instead. It's just a general rule that I follow. Is it perfect? No, nothing's perfect. It's just something I've noticed seems to work a little bit better for me. Internal lows or highs, I use a limit order. External highs, external lows, I use a stop order. Okay, this is a internal low. All right, so we're going to use a limit order on this one. We just line it up with that low, drop it in there. Now, again, we're doing 6. We're doing 6. First candle to break a new high. If we wanted to, we could put one right there, right? We could put a stop right here. It's internal, but it's the first candle to break a new high, so it should start to rally. That was the first candle to break a new low right there. We could have it short right there. Okay, this is internal. Let's see what it does. Oh, it didn't like it. I don't like it. Let's get out of that one. Oh, we lost again. Another 150 bucks. We're back down to the VWAP. I don't think it liked that jump. That's the problem we had. Let's get rid of that jump. Let's go back and just do the static because it's just too close. So we're going to take this feature off. I think that's what screwed that one up. So let's take that off. All right, so that's the stop. Let's go to the limit, 20. That's where I think we had problems last time we were trying to do this strategy. I think we were jumping our stop or moving our stop into an illegal location. Okay, where are we at? Here's an internal. So we could use a limit order. Oh, am I going to miss it? Oh. I think I missed it. Internal high. Oh, we got it. 30 bucks. So we lost 2 in a row, 150 and 130. And you have to make, if you're making 30 bucks, 30, 60, 90, 110, you got to make 5 orders to get back to break even. You got to win 5 times to cover that. So we got to win 10 times to just get back to break even. So what we're going to do is we're going to come in here, and I'm going to really be aggressive. We're going to put our order in here. Actually, we're going to do with, let's do 3, or let's do 6. I'm going to break above right here. This is actually an internal high. We could use a limit order, but we're going to use the stop, see if it won't break higher. Man, I've been coughing a lot. The air quality here is just terrible. I can't even see the mountains on the other side of the valley. Went to the doctor yesterday to see what was wrong with this cough, and he's like, you're fine. You're not even sick. Nothing's wrong with you. Why are you coughing? I don't know, but just keep coughing. I do have a little asthma, but I think it's all this air quality, all the smoke that's in the air. You guys anywhere where there's all these fires out here in the West, the air quality is really rough. We could do a limit order one here. It's not as fond of the limit order ones. We'll try it though. There's another internal high right there. Put another limit order one on that one. Oh, I'm too slow. Well, we got it anyway. Why did that not look right? 20, 20, 20. 25 on the stop, 6 on the limit. Huh. Didn't look like that. Okay, here's another one. Trying to break through. It's got to pop higher, not back. Should have been a limit. It's on an internal. Doggone it. And we had 3 on that one. Look, we're really getting our hiney handed to us today. Oh, we had 6 on it. Oh, we got beat again. 3 more. We're not having the kind of luck today that, look, we're down 1,002. So everything we made yesterday in power hour, we've lost today already. Go back to quantity 1 land. Let's go put 1 right up here. And we're doing 6 instead of 5. I don't know if that's what's making the difference. I'm putting limits on the, might be because I'm just putting them in the wrong place too. Using limits where I should be using stops there. That one worked for us. Didn't make any money though. Too much slippage. We've only got 1 little bomb sitting back here. We can place another little stop bomb right here. Let's do this one with 7. Stop bomb here. I'm just going to, I don't think we did a whole lot of limit bombs yesterday. We just did stop bombs. Let's put 1 here. Okay, we got that one. That was an internal higher high from going, just see all these higher highs. I just took the next higher high. See if it'll pull back, and we'll do 1 more. There's, how many is that in a row? 1, 2, 3, 4, 5, 6. We got a little bomb here. We got a little bomb here. We could put 1 there. That would be that's a rally though. We need the market coming down. That would be a limit bomb right there, right? Come down, touch that high, and bounce back off of it. There's a high. We could put 1 up there. There's 1 here. We could break above that high. That's an internal. We should use a limit order, but I'm just going to use stop orders. I seem to like the stop order ones a little better. Oh, we got too many out. Exit chart. Let's kill some of these. Go back down to quantity 1. Leave some quantity 1 bombs around. Maybe quantity 2 bombs. Stop. Let's put 1 here. It's coming down. We could put 1 right there. Oh, too slow? Yeah, you're too slow on that one, Lan. Maybe a good thing it didn't go anyway. Okay, we're coming into the news event. let's clear the chart. We got news coming in. All right. So at 8:00 we have the ISM manufacturing PMI. We're down $1,000. We got a little bit back. We're gonna keep trading. We're not gonna stop. We're gonna keep going. We're practicing. We're doing things up. We're changing things a little bit, making things a little bit different, right? So we got to practice the different things. Sometimes that makes you lose money in your practice, and that's what you're learning. You learn, hey, that's not as good as the other one where I made money. So you go back to the other one. But we're going to go and we're going to try 2 or 3 different things. We're going to see what we're going to do and kind of, try and fine tune our strategy. So that's the NASDAQ. There's the Dow. Let's see what this market's going to do with this news report. The S&P is right here, still toying with the VWAP. So while we're waiting, let's come in and say hello to a few people. There's Jay coming in with the gold medal today. Good morning, Lan and all. Just got on board with track and trade and learning, trying to teach an old dog new tricks can be done. Great to have you, Jay. For anybody else who wants to go get their track and trade software, you can go over to, just real quick, follow Jay's good experience, good leadership there. Pick up your editor's choice live trading platform over track and trade. Just go to trackandtrade.com. You can download it. We're trading the futures version, and we're practicing today the Minesweeper strategy. All right. So my primary strategy is the scalp and trail. That's the one when we're day trading. I like to scalp and trail, but we're doing the little mine strategy today, and it's a fun one. But we need to practice and change up some of the numbers, and that's what we're doing today. So go get your live track and trade, and you can come and do what we're doing here. Just go over to trackandtrade.com, download the futures version, and if you scan that with your little phone, it'll take you there, but you can't download track and trade onto your phone because it's not a phone app. It's a desktop trading platform. So, but that'll give you the address anyway, and you can save it. All right. So while you're there, go to Pitt News Magazine, pick up Pitt News Magazine. All right. That's going to come out today. All right. So great to have Jay on board. It's good to see you, Jay. Got his software. We got Bruce coming in with the silver today. Bruce, we're getting our hiney handed to us with our strategy. Bruce came and worked with me yesterday one-on-one for a little while, and we set this strategy up. I was showing Bruce, and we had some pretty good runs there too with Bruce. But Bruce, I've made some changes. I don't know if that's the difference, or if it's just the morning bell, or this thing's just dead. It's not got any follow through, but we're not doing too well today. Kirk's coming in with the bronze. Are you guys watching the Olympics? There's been some really fun things. That little gal that gymnast, most medals of any Olympic medalist ever. That's pretty cool, right? Is that ever in any sport or just in the gymnast? I wasn't sure. And then we got Kirk coming in with number 4. Kirk's nice to see you. Michael Bruce in the house. And then we've got Overgrown Acres. Good morning, all. It's great to see Overgrown Acres. And we're going to see what this news report's doing. It doesn't seem to be doing anything. Doesn't surprise me. ISM manufacturing. Well, the numbers have come in. Dow's starting to rally. 46.8. Forecast to be 48.2. Purchasing Managers Index. 46.8, I believe, is a positive number. I think you actually want this to go up, if I remember correctly. The index, you want the big buyers of manufacturing to buy stuff, right? That's the name of the game. Buy stuff. So look at the Dow's kind of rallying there on that news. Oh, so is the Russell. So if we were paying a little bit more close attention, not talking about the Olympics, we might have been able to pick up a couple of these trades. Why didn't I do that? Well, because I didn't. So here we're going to give us a little break to the downside on the Dow. And then maybe we can, I haven't got my strategy for scalp and trail set up right now. We got that turned off. Let's see if we can just take a long position on this. We're going to go along. Oh, we got kicked on that one. Didn't want to go back up. It wanted to come back down. I thought we might get a ABC on that one, but nope. It said I ain't going that direction. So it rallied hard off of that thing, but now it's rebounding. That was an order on the Dow. I just kicked in there real quick, and as soon as I put it in there, it came back off. Got stopped out to $85. Ugh, now it's falling like a rock. So I thought it was good news for a little while. Rallied up. Now they've changed their mind. Decided it's bad news. They're just taking quick scalps and taking some quick profits off this thing. You know what we're going to do while we're waiting for this market to calm down a little bit? Let's go put in our Wild Eye, Crazy Eye, Iron Butterfly. I think today would be a good day for that. So we're going to come in. There's no more news. That's the end of the news day. And the cycle is still sitting right at the VWAP on the S&P 500. So we're going to come in here and we're going to go out 2 days or 1 day. And we're going to go out and we're going to buy a call. Oh, look at that. Right. Perfect. Right where we want it. We're going to buy a call and we're going to buy a put. I'm going to put those right there. And we're just going to jump into those. And we're going to sell a call. And we're going to put that right on top of it. And we're going to sell a put. Oh, we can't do that. Got to go to 0 days till expiration. 0 days. And now we're going to go sell a call right on top of it. And we're going to sell a put right on top of it. All right. So now we're going to come in here. We'll just get into those quick. And we're in. Let's go see our positions. I didn't even look at the options chain. Just knew I wanted it. All right. So there we go. We have our 1 day straddle. And we have our 1 day and our 0 day straddle. So we shorted a straddle and we bought a straddle. So we're long and short the straddle. The only thing we're playing here is we're playing the theta. This is what I call the theta swap strategy, or the Wild Eye, Crazy Eye, Iron Butterfly. All right, we'll see how that plays through. All right, we're going to let that go. We could come in here and take it off when we make a certain amount of profit. In fact, why don't we do that? Why don't we come in here and we're just going to go on the 0 calls. We're going to come in here, we're going to liquidate, and we're going to say, hey, when I make, how much we want to make? Oh, going the wrong way. I don't want to make negative numbers. I want to make positive numbers. So we're going to come in here and we're going to say, when I make, there is 20%, that's $300. Or we could say when we make 25%, that's $375. Or we could say when we make 50%, depends on how confident we are this market's going to stay neutral and dead. If we go to 50%, you can see those little numbers down there, right? 50, there's 50%, that'd be $750. But we like to do 25%, and then if the market still looks good, we'll put it on us for a second time and take it off at another 25%. So we can do, oh, I'm going the wrong way again. So I'm going to go back down to 25%. All right. Let's bring it down. There's 50 again, 40, 60, 40, 30, 25 right there. 25%. That'll give us $375. We'll pull it off at $375, and then we'll reevaluate, see if we want to put it back on again, try and take off another 25, or let it run till expiration. We'll see. It's kind of flushing out on us right now, but we'll place that order to take our profits off at $300. All right, that one's done. Oh, wow. Look at that market. While we were doing options, that Dow really moved for us. Holy cow. That's why I think it's better to do scalp and trail in the morning and maybe do the Minesweeper in the afternoon. Let's put a mine on right there. And again, we got these things set at, oh, look at this. We got these things. That's a limit mine, isn't it? Yeah, we put a limit mine on that one. Six ticks. So that one worked for us. We picked up another $60 there. But boy, look at the difference. Look at the difference in size of this on the Dow versus the put them. Look at that. That's the same settings that we were using on the NASDAQ on the Dow. Oh, we could have had a little mine right there. But I went 6 instead of 5. Seems like a big move, doesn't it? In the Dow versus the NASDAQ seems so tiny. There's an internal. We could have done but it's moving. It's moving through. Let's grab our stop. Which one's our stop? This one. Okay, we'll drop another one right here. Is it going to break that low and go down there? I don't know if I trust that. Okay, and I keep dropping. There's where we can have that thing trail. ATR. Yeah, we got it. So that one was that's where if we're going to trade the Dow, I think we could, because that's such the difference in size of those markets, we could definitely have that trail if we're going to do this strategy on here, because that's a big move compared to the ticks that we're doing here. So let's change that up again. Okay, no, we're learning something here, right? 20. We're going to come in here and we're going to turn that trail on. We're going to go ATR on this thing. And we're going to come in and 20 on this one. And we're going to do the same thing. Actually, I don't think on that one, that's a limit order. I don't think we want to trail on that one. Just the stop. Here's another. Oh. There we go. Is it going to drop and break that and go? I don't think so. Let's turn that one off. I don't like that bomb. We'll drop the bomb up here. We could do a limit on that one. Oh, no. Would it have gone? I don't know. We'd still be sitting here wondering. Oh, we'd have got stopped out. Oh, maybe with the limit one, we'd have been okay. It's getting a little weak. Let's put a limit one in. Look at these bombs. They seem a little bit different on these, aren't they? Trading the Dow with these settings. Don't feel bad. You adjust the settings. I mean, just because these are the settings I have as the default settings doesn't mean that they're set in stone. You guys got to adjust your settings. I have to put something, so I put the ones that seem to work best for me at the time. Now that's got to pull back. Uh-oh, it's coming down. It's not pulling back. It's flushing. Go back up, you rotten little dog. That was a limit, so it's got to go up here. Profit's up there. Loss is down here. There we go. We got it. All right. So that worked out for us. Let's drop another. You want to put a limit in this one here? This external low? We could put another limit on that one. No scalp and trail today. We're just dropping bombs. Oh, we caught that one. Oh, keep going. That's a stop. It's got to keep rallying. Almost hit it. Look at that. If that had been 5, we'd have got it. But we have 6. Oh, keep going. Don't come back and stop us out. No, we're going to get stopped out. Stopped out. That little break right there didn't go 6 ticks. It only went 5. I think if we'd had 5, we'd have got it. Let's put another stop on this one up here. And let's put another stop on this one down here. Actually, on that one, let's kill this one. I want to put a limit on this one. Oh, there was one right there. We could have put, oh, and that one would have been a good one too. Keep going. Oh! Did it get it? It did. It got it. But man, that was tough. It went right up. It looked like 5 ticks and then it pulled right back. didn't get it dropped in time. Oh, there was one here. So it picked up that little bomb from back there. Oh, that's too many bars. It's going to get stopped out. Is it? Is it going to go? Don't trust it. We can move it in. Don't trust it. Don't trust it. Oh, we got beat on that one too. Put a limit on that one. What happened? There it is. Being a little slow. What's this one doing? Sitting here. Why is that sitting right there? That's kind of a... Oh, it's right here. It's a limit. All right. We've been trading with 6 here. Let's come back and change this up a little bit again. We're going to come back, and this is the Dow. We changed that up too. Let's go back to 20. And let's now change this to 7. 7, 7. All right. So we're going to go out one more. Go 7. And then we're going to come in here, and we're going to go to 20. And we're going to go to 7. 7. 7. Okay. All right, that's pull back. So we've got to pull back on that one. 6 ticks to get us against that previous low right there. That is that one right there. Okay, that got us a couple bucks. So let's come in here. Oh, it picked up that little bomb from last one. That was sitting out there. I think we're going to be doing better with these as the market pulls back against us with limit orders. It doesn't seem to be pushing through very hard. Not very long bars. Going to have more likely to get stopped out. Let's come in and put some limit orders. We're going to put a limit order on this one. And we're going to put a limit order. Now this one I've pushed out to 7. There's a high right there. I'm going to drop that in right there. Did I do that right? No, that's a stop. I did a stop. I meant to do a limit. If it would have been a limit, we'd have made money. I clicked the wrong button. Stop. Limit. Let's do the limits. Got to pull back. There we go. Let's do another limit right here. The further you push that back, the less likely you are to win, right? Because we got a lower probability. 2 ticks. We've gone from 5 to 6 to 7. Of course, it also depends on your placement. It's a strategy game. It's Minesweeper. Okay, what are we going to do here? We're going to think it's going to break above that. It'd have to be a reversal. So we're making lower highs and lower lows. So it breaks above that. Do we think it would accelerate up and break above that, or do we think it would? We'll put a stop, long stop on that one. Market's slowing down a little bit. I think that I'm going to change my mind on that. I'm going to put that one as a limit order. This one here, that's a limit order. What about this one? Let's make that one a limit order. We're going to use limit orders here for it. We probably, you know what? We should probably do a series of a whole bunch of limit orders and just use limit orders, and then just use stop orders and see, instead of going back and forth between limits and stops, we should just focus on one and see if one, and then use different time frames. So let's put a limit order on this one. Is that a limit or a stop? Okay, there's, oh, wait, what? Oh, that was a winner. Winner, winner, chicken dinner. Who was it that always says that? This is that redheaded kid. All right. We need it to pull back. Now we got 7 in there, so it's got to pull back 7 ticks, not just 5, not just 6. And these are range bar 6s. So it's got to take that into consideration too. Range bar 6, and we've got it set to pull back 7. So it's got to break a new low. There you go. So that one worked out too. So let's do a limit again, and we're going to put that right here. We got a limit here. We got a limit here on this high. We got a limit on this high. Here's another high. Let's put another limit on that one. Now I'm putting it a little bit further out than just right on the number, because I put it right on the number, it can take the short position without actually breaking the previous high because of the spread. So I'm taking the spread into consideration. Uh-oh, did I just drop a or what happened? That's weird. I did 2 quantities. Somehow I got a second one in there. I didn't mean to click that button. See if it pays off for us. One did. Let's get the second one in there. Not going to go. You can move those limits. You can slide it up in there. You're like, I want it. Slide it up in there. See if we can get a little closer and take it. All right. We're doing a little bit better where we're just using limit orders here, aren't we? Having a string of winners now. Let's see. It's a limit order too. All right. Good morning, Kim. It's nice to see you. Kim made it to class. We're doing the Minesweeper strategy. So for those of you who are just checking in with us, I see our numbers are starting to go up. Got a few more people watching. We're doing a strategy we call the Minesweeper. All right, I'll pull that up for you just real quick. This is the Minesweeper right here, but I'll show you the rules while we watch the market. Look at it go. This is just a scalping strategy. We had a news event today, and so we did Minesweeper yesterday on Power Hour. If you didn't see that video, that would be a good one. I think everybody should go watch the Minesweeper video from yesterday. It was Power Hour yesterday. I didn't, the little marquee, the little thumbnail doesn't say Minesweeper. But that was a good video to watch the Minesweeper strategy on, because we did really good on that one. We traded a different market. This is the Dow. We're trying it out on the Dow today. And we're changing up the settings too. We went from limit on 5 to limit on 6. Now we're on limit on 7. We're going to see what kind of difference that makes for us. And we went to a different market. We were on yesterday on Power Hour, we were doing the NASDAQ. On, of course, right now we're doing the Dow. You can't see it because I'm in the way. There. Gonna pull back, give us a little butterfly there. Come on, buddy. I think if we'd have had 5, we'd have done it. But this is on 7. There it goes. But 7 gives you more money. It's all a trade-off. Oh, we missed it again. If it would have been 6, it would have made it. Nope. It's going to turn and start to fall again. Oh, no. Oh, that's why. That's why before I didn't click a button and accidentally put one in. We had a bomb sitting back there further that got fired off. We needed to pull back and hit that limit order. We're still long. I'm just trying to get 7 ticks. Here it comes in with the blue light. Across the blue light, it'll go up. Nope. Broke it and dropped back down again. Counter trend. Well, $1.25. That didn't work for us. This 7 seems a little bit far out there for this market. Come on, get her up there. There we go. That was a better move. We got these little bombs sitting out here on these previous highs. Put another little limit bomb right here. Put one right there. We're not using stop bombs right now, just limit bombs. We're just practicing. Trying to find out which one we like best. The further we put that limit order away, the less probability it is it's getting hit, right? But when it does get hit, we make more money. On limits, we're not jumping the stop because it's on the wrong side of the market. We don't want to jump into an illegal position. So we're gonna, if we want, we got that one. That one worked for us. Another little limit bomb. Breaks that low. And now back off. Go back up. Go back up. Go back up. Not down. Go back up. Not down. Go back up. You're going to go up 7 ticks? It did. It went up 7 ticks for us. Little dangling bombs out there. Breaks that high and then pulls back. That's what we're looking for it to do. We got one right here. This is some nice area of support. Let's put one right back there against this one. I don't know. It's already got one too far out. I don't know if that's going to have any effect on it. It's just kind of random. That little low right there, I think, is being overtaken by this low here. We'll try it. Internal low. Nope, didn't like it. Well, tried it. It just came down right. Touched it. Just because I went one, look, it did. It come right down and touched that exact price. And I didn't hit it just because I was one tick outside the bar. Oh, this is breaking higher. Going to get that one. Pull back. Is it going to pull back 7 ticks? It did. All right, let's try on this one. We got this low here. Oh, we got one in there for that one, don't we? We're doing a little better. We're starting to knock it down a little. You can get brave. You can go start doing larger quantities. We got to take commissions and fees against this. Remember, we're not moving as quickly as we think we are. You got to take out commissions and fees. Joe Biden proposed that he raise the fees. He doesn't think he's making enough money on us yet. Oh, this one doesn't look good. This looks like it wants to follow through. Maybe should have been a stop. Breaking of that internal low right there. Oh, no. Phil picked up a different one, too. Now we got two of them running at the same time for a long position. Ooh, almost got stopped out on that one. That market's flushing. We need you to pull back, buddy, not go down. Don't keep going down. Oh, no, we're going to get stopped out. That was a sad day right there. We're going to get stopped out here, too. We're long from all the way up there. Well, we're breaking a little bit. It's going to continue down. Back. And so we're going to get it down again. We've been doing better right down here with stops instead of limits, huh? I think when the market's trending, you do better with stops. When the market's sideways, dead, you do better with limits. And here's the timing of that crossing the blue light right now. So that's going to be bullish. Take a long position, Land. We could. We got our hiney handed to us with those last four orders. Look at that. Last two bombs bombed us. Brought us all the way back up above our nasty number. Okay, is it slowing down? See, that's where we got beat up because the market started to trend. Those limit orders, you don't want the market to trend. You just want it to bounce around. Stop orders, it can trend, but not with limit orders. Let's exit the chart. Let's get rid of all the existing bombs, and we'll start afresh. Let's go over, and then we also way out to 7 too. So we're really asking the market to move 7 ticks. Let's go to, I want to try this over on the Russell with the larger tick size. We're getting a flush on the S&P too. So we're down $350 on our Wild Eye, Crazy Eye, Iron Butterfly. We'll have to see. Yesterday was a big up day, so it makes little sense for it to be pulling back today. It's okay. Not too worried about it. Not too worried about it. It's only $300. All it has to do is turn around and drop and then come back up to the VWAP, and then it'll pay us off. We'll take our money off the table at that point. Market's going to bounce around a little bit. Okay, we're going to set some bombs in here. Do we think that's going to continue? Or do we think it's going to pull back? Let's do a limit order. Let's just kind of stick with it. Oh, wow. Look at the size of that comparatively. This is a range bar 50. Okay, let's put our bomb in there. Oh, I missed it. It's too slow. We'll try it on this one. The stop, did I use a stop or limit on that one? Oh, I used a stop. So that's a follow through. Okay, we got that one. Stop. I'm going to use a stop as this market looks like it's trying to rebound. We'll use a stop off each one of these highs. Oh, we missed that one. There we go. So we want it to break higher and keep going higher by 7 ticks. So all it has to do is break higher 7 ticks. So as the market's trending, I think when we're doing trends, it says it's got a jump stop in there. I don't have a jump stop in there. I'm going to show that to the programmers. That's not a jump stop. I'm going to replace that one. It's an internal limit, external. Okay. Got one more internal limit here. Just needed to break it and pull back. Break it and pull back. Break it and pull back. Break it. Pull back. Pull back. Don't go down. Okay, it pulled back. That was a scary one. I almost think that our stop's a little bit too close on this one. I don't know. Don't want to make a bigger stop. Okay, that was a continuation. That's a stop. It's got to go down on that one. Oh, and it's pulling back. Okay, we got that one. That was an external. I did the internals with limits. I did the externals with a stop. Both of them worked out for us. Let's kill all these. The little internals worked pretty good with the limits, didn't they? Did you see what I just did? Okay. Let's hang our butt out on the line here. Let's see how close. Oh, it rejected. Why did it reject that? Well, exit all. I know why it rejected. Because I had 2 of them on there. Well, that was an accident, but it worked out. I don't know if you can count that. Mistake. Mistake made us money. We make mistakes and we lose money and we count it. I guess if you make mistakes and you make money, you can count it too. Let's wait for an internal. I like the internals. They seem to be working a little bit better. Internal, this is the limit, 20. I'm going to show you this is 20. There's the settings. We're using 7. At 7 and 25. I'm putting it just above the high of the internal, the next bar higher by the distance of the spread. So just outside the spread. So it has to break it, get the spread up there to take the short position. And then it only has to flush back down. We got it set to 7. Flush back down 7 ticks. Or push through to 25. I'd rather, if we push through to 25 ticks, then we lose. But it seems to pull back at least 7. Bruce is like, I'd count it. I'd count it. We got this is the same one. These are internals. Let's do limit. Limit. We got another one right here. Internal. Another one right here. You set all these little bombs. Limit. That's an external. We got an internal and an external. Okay, pull back. We got it. I went back down to quantity 3. I don't like this little cluster of bombs right there. Limit. Where are we at? Internal. Pull back. Okay. We got one here. Internal. That's an external. It's an internal. So we can do a limit on this one. Do a limit on this one too. Limit here. Got that one. Put one here. We got one here. Those are all reversals. I don't know if we get those. I'd like to go the other direction. Usually we'll see on the pullbacks. Got one here. Got that one. A limit on the. Do I have one on this one? I'm not keeping up with it. Put one on here. Too many. Getting too many bombs. 3, 6, 9, 12. Yep. Let's kill some of these further out. Too many going. Put a limit on this one too. Put a limit on this one. And we'll put a stop on this one. Okay, we got that one. We're doing pretty good with the 7s on the NASDAQ. We weren't doing so good with the 7s over on the, this is range bar 50 NASDAQ. That and got it. That was a stop, that one. That was not a limit. That was an external lower low. It wasn't an internal. I'm putting the limits on the internals and I'm putting the stops on the externals. What's the difference between an internal and an external, Lan? The externals are peak highs, peak lows. Internals are just previous highs or previous lows. I think when it breaks these previous highs or previous lows, it has more tendency to kind of pop up a little higher, as opposed to have a little more follow through, as opposed to just breaking an internal high or low. It kind of goes up, breaks it, and then pulls back. So it just needs to pull back enough to hit your. The problem with this strategy is that it is not a 2-to-1 risk versus reward ratio. You're not getting 2 wins for every 1 loss. It's the reverse. You're getting 5 losses for every 1 win. So you have to win 5 times for every loss. So you have to have a really high probability. And the further we push that limit out, we went from 5 to 6 to 7. The more money you make, but the less likely it is to get hit. But with 7, we're doing really well. 7's always been my favorite number. But when we start, I want to start real conservative with 5 and get some real high percentages, and then start pushing out to 6, 7. We can go out to 8, 9, 10. You know, you're going to start having less hits. But when we were over on the Dow, 7 was a little bit too far out. Why? We kept getting smacked on it. We would have been better with 5 on the Dow. Smaller market. And it was a range bar 6. It's a range bar 50. Not that, I mean, the only difference on that is the placement, where we're putting it, where you're going to get highs and lows. So the trend is going to be different. Highs and lows of the trend. All of our little bombs left out back here, it's kind of left us in the dust, hasn't it? Let's kill all these and start over. Well, I guess that's going to be, I guess we run out of time. That's going to be I'm going to call it a day. Bruce says he'd count it, so we're going to count it. Let's go put it into our spreadsheet. Oh, we can't put it in the spreadsheet because the spreadsheet is not. So we're going to go over to June, July, rename, August. And we're going to put in here $2,760 for the first day of August. Bruce says, let's count it. So we're going to count it somewhere in here, right? So we're going to have $2,760. And I'm going to break this apart now because we're starting to do power hour. So I want to have a separate column for power hour versus morning hour. So back here on July, see, we started to do power hour. Which one of these were power hour? Which ones weren't? We don't know. So I'm going to change it out. And I'm going to, look, we did no YouTube stocks. We got to start doing more stocks. I don't do a lot of off hours because if I'm going to trade off hours, I'm going to trade real money. Then these are our options. So we still have a wild eye, crazy eye, iron butterfly we got to kind of put in out here too. So I'll get this all moved over. I'll get this posted. I'll tell the boys not to, actually the girls, I'll tell the girls not to post the Pit News Magazine until I get my spreadsheet done so that you can get the spreadsheet at the same time. And Pit News Magazine is going to come out today. For those of you who don't have Pit News Magazine, it's a cool thing that you're going to want to have that. Yeah, you are. You're going to want to have that. Go pick it up. Pit News Magazine, pitnews.com. It is the club magazine, and it's all about trading, and it documents the stuff that we're doing here. So I can almost guarantee you that we're going to have an article in Pit News Magazine all about Minesweeper in the September issue. Can almost guarantee it because we're working on Minesweeper, and we've had some pretty good trading with Minesweeper. So you're going to have that in the Pit News Magazine, and we'll have it all documented for you, and we'll show you the adjustments, the examples, and everything will all be documented in Pit News Magazine. So go get Pit News Magazine. You get subscribe for 3 months for $1. All right, and you get this spreadsheet. If you don't like it after 3 months, cancel. And you can even, if you want, send me an email. I'll send you your $1 back. Yeah, I'll give you your $1 back. I'll give you a 90-day satisfaction guarantee. After that, it's $50 for an entire year, 12 more issues. And I think you'll love it. So if you like this class and you learned anything and you had fun, then let's go ahead and hit that little like and subscribe button. That always helps. The YouTube algorithm lets other people know that we're here. We have a nice little class here, a little group of people. It's always nice to invite others, though, to our fun club. All right, guys, look at this market. We should really be scalping, trailing today, man. The market's really trending. All right, we will catch you guys again. I think tomorrow is going to be, I kind of switch things up because of construction. So we're going to probably do Power Hour again tomorrow. Tomorrow's Friday. So let's trade Power Hour Friday. All right, we'll see you guys tomorrow.